Hello world, welcome to Farm the Market. On the Stock Trading Journal series, I share with you some of my trades. I do not claim to have the quote-unquote epic strategy that beats the market every time. I just hope it's a good exercise for me, where I get to analyze some of my trades deeply by explaining them to you, and hopefully for you, by looking step by step at examples of real trades, you might find interesting some of the techniques or adjustments I use on my trades, and this might help you in your journey to develop your own trading skills. This time we will take a look into a trade on Alibaba. Let's get started. Alibaba has been a very popular stock for a while among value investors. I'm sure you have seen many articles or videos related to this topic in the past few months, especially after the stock went below $200. High-profile investors like Charlie Munger are very keen on the stock's fundamentals and future potential, so this has generated a lot of hype around Alibaba. I don't believe in just copying what a high-profile investor does. It's very important to have your own process. However, one of the main concerns with Alibaba, among many, is trusting the numbers that come from China. You can do a sound fundamental analysis on a stock, but if the numbers underlying the study are fake, you are doomed. Here is where the quote-unquote sponsorship of high-profile investors like Charlie Munger comes in. If he and others on that level are willing to trust those numbers, that gives average investors a little more confidence to take a serious look into Alibaba. Within that context, I have been watching Alibaba for a while, looking for a long trade with a mid to long-term time horizon in mind. I have been following closely the weekly chart since 2021. It has been stuck on a downtrend. I have been waiting for a while for something like a breakout, a retest of the downtrend, and hopefully a continuation upwards, but so far nothing. Then 2022 came by and the market conditions have been deteriorating considerably. If you want more information about which metrics I use to assess the general market condition, I invite you to watch a video I made about a trade on American Airlines. I covered that topic on the first few minutes of the video. You can find a link in the upper right corner. With the market deteriorating and Alibaba in a clear downtrend, I switched my focus to be in the lookout for a short opportunity on Alibaba. During the first weeks of 2022, Alibaba was forming what looked to me a clear contracting pattern, with a floor around 110. I was looking closely at this level, aiming for an entry point for a short position on a breakdown. On February 24th, the market went crazy, given the news about the Ukraine invasion. Even though on that level Alibaba broke down the floor line, it came back up considerably and closed very close to the line. I decided to wait. Then February 25th came by. Alibaba closed once again below the line. It wasn't a decisive signal, but it was good enough. I decided to open a position with half the size. The bottom of the current weekly trend line was about 21% below, so I decided to set my stop loss close to 7% and therefore aim for a 3-to-1 return to risk ratio. Okay, time out. I would like to take this opportunity to mention something very important. Whenever I talk about target levels for profit taking, those numbers are extremely arbitrary. I'm just trying to have a reference. It's impossible to know how far the price might go. Since we are looking at an individual trade, I use them on these types of videos to give you a sense of proportion between the potential risk and return. However, it's way more important that the individual stop loss is placed at a reasonable level. The stop losses should be based on your general winning trade average return. As a rule of thumb, your stop loss should be 1/3 or at most 1/2 that average. Please keep that in mind. Okay, with that out of the way, let's continue with the trade. Alibaba moved sideways for a few days and then down once again, getting close to the February 24th low. At this point, the initial trade was already about 6% profitable, so I decided it was a good moment to add the other half of my position. With a new average price, I decided to move my stop loss closer to the first trade selling price. Now, assuming no gap ups, my worst case scenario was about a 3% loss. On the following days, Alibaba keeps falling and on March 10th gaps down. Using the intraday low, Alibaba at one point was almost 10% down. As the market was about to close, Alibaba comes back up, but it was still a big down day. I decided to close my whole position and book the profits. Overall, it was a good trade, with a return of almost 11% in 2 weeks. Playing Monday morning quarterback, the next day Alibaba drops again almost 7%. And this time it's a better looking candle. No lower wick, it closed at the low of the day, and the volume is slightly higher than yesterday. Opening the whole position on a single trade and holding until yesterday would have been almost twice the return. But as we all know, hindsight is always 20/20. However, looking back at the trade, something more reasonable I should have done was only closing half the position on March 10th. I could have booked some profits, moved down the stop loss to my break even, or even lower to secure a profit even with a bounce back up, and let half the position keep going. Actually, I usually do that on my long trades. I trade around my position in halves often. I guess with shorts I get a bit more anxious. I was in a hurry to secure a profit. I should remember to relax. Regardless if it's a long or short trade, I had a lot in my favor. I could have given the trade some more breathing room. Until next time. I hope you found this video interesting. Please remember to like and subscribe. Thanks for your time.